They're the system quietly shaping the price of gas, the cost of groceries, the strength of the US dollar, and even how much power America holds over other countries. It's called the petrodollar, and it matters because oil touches almost everything you pay for. It fuels trucks, ships, and planes. It moves food, clothes, and electronics around the world. It's used in plastics, chemicals, and fertilizers. So when oil moves, prices move, and when the currency used to buy oil matters, the whole economy feels it. So what exactly is the petrodollar? The petrodollar system is this. Most of the world's oil has been priced and traded in US dollars. That means if any country wants to buy oil, it usually needs dollars first. It doesn't matter if that country is in Asia, Europe, Africa, or South America. If oil is priced in dollars, global demand for dollars stays permanently high. Here's why that matters to regular people. If the entire world needs dollars to buy energy, that keeps the dollar strong. A strong dollar gives the United States real advantages. It can borrow more cheaply. It can run bigger deficits for longer. It can pressure other countries through sanctions. And it can stay at the center of the global financial system in a way no other country can. To understand how this happened, you have to go back to the end of World War II. Most of the world had been devastated. Europe was damaged. Economies were broken. But the United States came out of the war with its industrial base intact and its economy far stronger than almost anyone else. In 1944, world leaders met at Bretton Woods and built a new financial order around the US dollar. Under that system, the dollar was linked to gold, and other currencies were tied to the dollar. That arrangement gave the dollar global trust. But then, in 1971, President Nixon ended the dollar's convertibility into gold, what's known as the Nixon Shock. From that point, the dollar was no longer backed by a physical commodity. It was a fiat currency, meaning its value depended on trust, confidence, and the strength of the U.S. economy. You might expect that to weaken the dollar, but something happened just a couple of years later that gave dollar demand a powerful new foundation. In 1973, oil-producing Arab countries cut exports to nations supporting Israel during the Yom Kippur War. Oil prices surged. Inflation exploded. Western economies were hit hard. In response, the U.S. reached a landmark agreement with Saudi Arabia. Saudi Arabia would sell its oil in US dollars, and in return, the US would provide military support and protection. Because Saudi Arabia was the dominant oil producer at the time, other producers followed. And just like that, the dollar became deeply embedded in the global oil trade. This is the core of the petrodollar system. Think about what that means in practice. If you're a country like Japan, energy hungry but oil poor, you need dollars to buy oil. That means you either earn dollars through trade, hold dollar reserves, or invest in dollar-based assets. Multiply that across dozens of countries, and you get permanent global demand for dollars. That demand is powerful. It helps the U.S. government borrow at lower interest rates than most countries. It sustains demand for U.S. Treasury bonds, which are considered the safest investment in the world, largely because everyone needs dollars and has to put them somewhere. And it gives Washington enormous leverage. Because if global trade flows through dollar systems and U.S.-linked banks, the U.S. can restrict access to that system. This is one reason American sanctions hit as hard as they do. They work not just because of military power, but because the dollar sits in the middle of so many transactions. There's another layer called petrodollar recycling, and it's easier to understand as a loop, so picture this as you listen. When oil exporting countries earn massive amounts of dollars, they don't leave that money sitting idle. They reinvest it into U.S. Treasury bonds, American companies, and real estate. So the dollars paid out for oil often flow right back into the U.S. financial system. Countries buy oil in dollars, exporters receive those dollars, exporters reinvest them into U.S. assets, which funds American borrowing and spending. Round and round it goes. The world needs oil, oil needs dollars, and the dollars keep coming home. Now here's the question a lot of people are asking today. is that system starting to crack. In recent years, China and Russia have pushed hard to reduce their dependence on the dollar. Some oil trades have already been settled in yuan. BRICS nations, Brazil, Russia, India, China, and South Africa, along with newer members, have openly discussed building financial systems that bypass the dollar entirely. Russia, especially after sweeping sanctions following its invasion of Ukraine, has had every political reason to find alternatives wherever it can. So, is the petrodollar dying? Not quite. Moving away from the dollar is far harder than making speeches about it. Oil markets are built on decades of contracts, pricing systems, insurance structures, and banking relationships, all denominated in dollars. The dollar is liquid, widely trusted, and capable of handling billion-dollar transactions smoothly. No other currency currently offers that combination at global scale. China's yuan, for example, is not freely convertible. Most countries don't want to hold large reserves of a currency they can't easily move or trust fully. The euro has scale, but lacks a unified political force behind it. So for now, the dollar's structural advantages remain intact. Countries shift away from it where politics force them to, but keep using it where efficiency still matters most. So why does all of this matter to you personally? Because a petrodollar is not some abstract process running quietly in the background. It's a real economic arrangement that explains some of the most important features of the modern world. It explains why U.S. debt has been easier to finance than most people expect. It explains why American sanctions can cripple economies thousands of miles away. It explains why the dollar keeps appearing in global trade, even between countries that have nothing to do with America. And it explains why countries that openly oppose the United States still struggle to fully escape its financial orbit. The real question going forward is this: what happens if the world slowly needs fewer dollars to buy the thing it needs most? Because that answer is beginning to shift. Renewable energy is growing faster than at any point in history. Solar and wind are now the cheapest forms of new electricity generation in most of the world. Electric vehicles are displacing oil demand in transportation. Some countries are producing more of their own energy and relying less on imports. Alternative payment systems are being tested between countries that want options outside the dollar. None of these changes are dramatic in isolation, but energy transitions have reshuffled global power before. Coal gave Britain its empire, oil gave America its dominance, and when they did, the effects took decades to fully surface. If dollar demand tied to oil weakens, even gradually, the effects could ripple across energy prices, inflation, interest rates, global alliances, and the financial room the U.S. government has to keep borrowing the way it does. That's the real weight of the petrodollar. It's not just a pricing mechanism. It's structural. It's baked into how the global economy moves money, settles debt, and manages risk. And when structures shift, they don't announce it loudly. They move quietly, at the edges, until one day the pressure is different and nobody can quite explain why. So the next time you hear the word petrodollar, don't hear a finance term. Hear a system that ties together oil, money, power, and your cost of living more tightly than most people ever realize.